Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today, we're going to take a look at a survey about how consumer data is changing the way that people are buying cannabis and how they're buying it. We're going to dive into a little graph here from MJ Business Daily about adult use sales and the percentage change month over month as the shift from this virus is changing consumer behavior. So we've already seen some big changes coming in cannabis, starting with the stock market, a huge drop in a lot of the indexes. That's the Horizon Marijuana Life Science ETF that fell 39%. As the S&P rose 29. So a lot of those cannabis stocks have been depressed as much as 80 to 95% of their value, still not seeing all of the bottoms yet. And some layoffs are going to follow suit. We've already been seeing some massive layoffs, as much as 50% or even more. Aurora Cannabis made that headlines in February. As well as the CEO, Terry Booth, stepping down. So this is going to be a first wave of layoffs and job cuts for cost reduction. So we're going to see even more pressure to trim costs. We've seen a lot of these Canadian LPs stop manufacturing in Latin America, which doesn't make a whole lot of sense because that's cost savings. But if you have an overproduction, you're going to stop no matter how cheap it is. So that's going to be a red flag or something to look at down the road. We might even see some hostile takeovers as Aurora Cannabis and Canopy and Green Organic Dutchman, Hexo, Medman. They're all down anywhere from 2/3 to almost 100%. 94% is a lot for the Green Organic Dutchman. And so with the 12-to-1 reverse stock split, if we see that from Canopy or from Aurora, I would expect short sellers to drive that price down another 80% before we see a hostile takeover from some corporate America company or another LP trying to merge. So I would expect that to be on the near horizon. In addition to layoffs, we'll see some bankruptcies from either hemp producers in the U.S. or from Canadian LPs up in Canada. I would expect a lot of restructuring. Most of them expect to be a break even at $1.74 per gram of flower, and that's never going to work. So they might as well use this as an opportunity to restructure and get rid of all of those shareholders. So that's going to wipe out a lot of equity holders, but it'll be the only way for them to survive long term. Some of the steps leading up to bankruptcy that we're seeing is unwinding of deals. And so there's been a lot of people that have had to unwind those deals, from Forefront Ventures to Harvest Health and Recreation. They announced March 26th, they're walking away from an $850 million acquisition of Verano Holdings. And they're not going to be the only ones. CanTrust Holdings, they're going to be delisted. So that's going to create some opportunities for folks like us who have a cannabis index that are doing a lot better than the competition, as you can see. And so what does this mean for investors in the cannabis space? You're going to see a lot of companies aggressively pursuing growth opportunities and acquisitions in Europe or even North America. They're going to probably go from Canada to the US. Canadian marketplace was incredibly over leveraged. I think there was a lot of speculation. So some of those investors are going to liquidate or dump their investments and come down to the US. Private companies who don't necessarily have as much speculation, whose valuations are a lot more down to earth and have access to places like California with the 5th largest GDP in the world. I would expect a lot of players to diversify out of that Canadian marketplace into other areas, maybe Macedonia, maybe Venezuela, some other places. They're going to be looking for ways to keep costs down. So producing cannabis indoors in North America, not going to happen. You're going to be looking for outdoor cultivation, or at least indoor in other places where it's less expensive. You're going to see more patients turning to cannabis as a way to relieve anxiety and stress and also not be hungover. So as places like France and Greenland ban the sale of alcohol, that's obviously going to spur either medical or recreational opportunities in those regions, and obviously just increase the number of people turning to cannabis, looking at it as a holistic or a different approach for nerves. So anybody who has a situation where they're stressed out or have high anxiety, they're going to be looking for CBD and THC products. So there's going to be a lot more people going into the cannabis space as this stay-at-home order drags on. You're also going to see a lot of the pretenders go away. So those middlemen, those CBD people, gone. A lot of the business owners that weren't paying themselves a salary, the altruistic individuals, gone. And then you're going to see a lot of curbside pickup. A lot of delivery options are going to increase, even though that's not legal in Washington. You are going to see delivery become a staple in every market. So definitely delivery, curbside options. And then to entice those people, you're going to start seeing a lot more, text messaging and discounts and offerings to get people to switch from going in person to delivery and curbside. So let's take a look at the consumer preferences and how the behavior is changing from being at home. Looks like a lot more people are possibly buying online than they were on the stores. Maybe that's partly to hoard it or to save some of that flour for a rainy day. Can't really infer what people are doing with the cannabis, but we can kind of just take a look and see what they're buying and how and when. All right, running through this survey conducted by the American Marijuana.org, where they asked 990 US cannabis consumers how they would decide what to buy, cannabis or food. 5% said cannabis over food, 28% said cannabis over face masks, 15% preferred cannabis over hand sanitizer, and 17% like cannabis over toilet paper. All right, did you guys stock up? I did. Let me know in the show notes if you guys stocked up. I bought an ounce and put it away for a rainy day. It looks like only about 48% did the same thing. Looks like we're not even about halfway, but I'm one of them. So, of the 482 participants who said they did stock up on cannabis products, over 55% clarified that they did so to calm themselves during the pandemic chaos, while 23% did so in fear of a shortage. So, roughly 22% just stocked up on products because they wanted to chill at home. The same folks were asked if they prefer smoking cannabis over indoor sports or surfing the internet. Of the 990 surveyors, 28% would rather binge watch TV. A large portion of U.S. cannabis consumers don't seem to be affected at all should the U.S. government decide to impose a nationwide quarantine, as long as they have some cannabis products that they can consume at home. With about 54% of the U.S. consumers that took the survey felt calm amidst the coronavirus global pandemic, as they believe everything is going to be all right. So looking at this graph from MJ Business Daily, it looks like the cannabis sales in the four key markets decelerated in March as the crisis kind of continued to disrupt the cannabis industry in the broader U.S. economy. So according to Headset's data, it looks like sales in Colorado and Nevada declined from March. It's the first time that adult monthly sales in either state reported a year-over-year decrease. So sales in California and Washington still rose in March, but the growth was a lot less than expected. So when we break down March, you see that the first 2 weeks of sales in California in March were up 70%. And then the last 2 weeks in March, they were only up 38%. Looking at Colorado, first 2 weeks in March, sales were up 10 and then down 21%. Nevada, sales were up 12% in the first half of March and then down 15%. Washington State was about flat. They were up 9% and then up 10%. So with the virus downturn, this is having a lot of companies that are both publicly traded and otherwise scaling back and laying off workers and cutting costs, and has also spurred a shift in consumer spending habits. So there's a lot of dollars that are moving away from pre-rolls towards edibles, which we've kind of speculated that might be due to combustion and fears of lung issues, trying to stay as healthy as possible until this virus is over. So how do you think 420 is going to be impacted by the COVID virus? At Headset, they expect that sales volumes on 420 to be substantially lower than prior years, but boosted throughout the entire week. Headset believes this because rather than flocking to the stores on 420, that there's going to be a substantial amount more of online purchases, with consumers making earlier purchases to reduce the crowds and obviously utilizing the discounts and getting there. They also expect a lower average discount on the day of 420 compared to previous years. So that's going to happen because retailers are going to drip their discounts throughout the week to encourage consumers to purchase early and avoid long lines and crowded stores. However, that expectation is going to be higher than average discounts in the day preceding 420 as retailers try to lure those customers in to make purchases early and entice them to continue shopping. With that, the expectation is to have higher average basket sizes throughout the next week. So this graph is showing retail data that's collected from Headset for California and Colorado, Nevada, and Washington on 420 from last year that shows a sales increase by staggering 112% compared to the average sales generated in the prior month. So according to these figures, every state experienced a sizable uptick in sales, and California had the largest at 122%, followed by Washington with 117%. Colorado had the smallest increase of 97, and Nevada was in the middle of it all with about 101% sales increase. So when it comes to the highest performing products on 420, flower reigned supreme, generating $15 million and 122% increase in sales. In terms of growth, you have the beverage market as the dark horse among the retailing products and experiencing 145% increase in sales compared to the prior month. And among the beverage segment, you have carbonated beverages that are most popular. So here's how much retailers should discount or an expectation. Consumers expect attractive discounts on 420, and so retailers should be prepared to offer that fair promotion without hurting their bottom lines. Last year, the category that experienced the largest discount among all of Headset's market was concentrates, which were discounted around 19%. So aside from concentrates, every category had a discount rate between 14 and 16%. Additionally, that category with the largest increase in discount rates was capsules, and the lowest difference seen was concentrates. This reflects that concentrates are usually discounted rather heavily compared to other categories around the year. And I'll be going to 20 stores on 420 to see what everyone is offering. So we'll report back next week. But with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.